Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to consider the quarterly earnings of the Intel, which is a chip maker which has been under pressure for last couple of quarters, and since the release of its third quarter financial results, it has been seeing a rebound in its share price, and even in today's session it is trading more than 2 percentage point up. So we are looking at the possibility of revival of these legendary chip maker, which was kind of lagging when it came to AI and other innovations. But now it seems to be getting its acts together and trying to stage a rebound. It has laid out a roadmap for the revival, and it is taking the steps to cut cost and improve its profitability as well. And to that end, it has cut the number of employees. It has also laid the plan to achieve 5 knots in 4 years, and we are seeing progress as 2.5 years have passed for that goal, and the company is saying quite confidently that it will be able to achieve its targets, and that has given renowned renewed hope for the investors. And as a result of that, there is fresh buying momentum in the stock back, and we are looking at the possibility of its medium term to long term trajectory being slightly bullish even for us, with odds being in our favor. So first, we consider its earnings report, which was released in the last week of October. This is the third quarter 2023 financial result, with its revenue at US dollar 14.2 billion. Though the revenues are down in terms of year on year, still the market consensus was even for the revenues to be lower than this, and as the company was able to beat that estimate, we are having this bullish momentum for the stock, with its EPS coming in better than expected. The operating margin is nearly flat. There has not been significant change on that front, but some achievements have been listed in AI domain as well, and its other initiatives for expansion of its foundries spare capacity has also been listed. So these are some of the highlights for its financial results, and that seems to be playing well for the company. This is the publicly available document, and for all this fine print, you can read through the document. But here I will be only covering the major points. And as I said in introductory remark, its ambitious goal of achieving 5 knots in 4 years is on track, and it is expecting a breakthrough which is going to help the company claw back its lead in the chip making space. It is also trying to bring the AI capacity to the CPU. Currently, most of the AI work is done through the cloud backup, but Intel is taking steps to bring that to the CPU, to the PCs, and that is going to be revolutionary as and when that happens. It is also going to list two of its subsidiaries as independent unit, unlocking the value therein. Let us look at its consolidated reports consolidated revenues first. This is the statement of income, and if we look at these net revenues are just slightly above $14 billion, which is, as I said earlier, also less than last year's $15.3. But if we look at its operating margin, it has seen slight improvement, and it has been able to cut its cost while also giving us a guidance that in coming quarters it is going to cut more than $3 billion worth of expenses. So that is going to be a positive, also improving its margin even further. The operating expenses were lower for the company, and as a result of that, it was able to post a better than expected EPS. The revenues have been under pressure, and not all the problems of the company have gone away, but the future is not looking that clouded as was the case earlier. So these are some of the key highlights of the earnings report for the company. Let's look at the segment wise result. The client computing business, which includes the desktop, notebook, and other, has brought in more than half of its total revenues with $7.8 billion. The data center and AI has seen some reduction of around 10 percentage point as some of its key clients have moved away from its chips to other designers like Nvidia and AMD, and that has reduced its market share and reduced its revenues. Network and Edge has also seen the reduction in revenues. But if we look at some smaller revenue contributors, its subsidiary Mobile High, it has seen its revenue rise, though this is a marginal player. Intel Foundry Services has also seen the rise in revenues, and there is a remarkable almost 300% percentage point growth. But overall, it is still a smaller contributor. And if we look at profitability, the Intel Foundry Services remain in loss, uh, whereas other four segments are bringing in the profit. Now let's see how things are unfolding on the technical side. There is the daily time frame chart where we have seen this continuous rise since the release of its earnings on 26th of October. In today's session, there is fresh momentum and it is trading above this prior swing high. So here is a key development for the company, and I feel with this breakout of sword, it is likely to be a major breakout for the stock, and we can expect this positive momentum to take the share price towards 50, and with its current valuation not that pricey, we can expect further upside for the stock. Let's look at its larger time frame charting. The second half of 2022 was quite bad in terms of this swift decline. Afterwards, it went into a prolonged consolidation only. Now, in the second half of this year, it is seeing some fresh momentum on the lower levels after the company took several steps to cut cost and improve its profitability while trying to take new initiatives to take the lead in the segment. And to some extent, that seems to be paying off, but it is still long way off from where it used to trade back a couple of years only. Now, with this fresh breakout, we can expect it to continue for next couple of weeks at the minimum, and that opens up the possibility of adopting a buy on dip strategy for the short term. For the medium term, the same can be said with its consolidation having a bullish bias. We can safely consider these prior swing lows, this price range of around $35 to be a support next time around whenever there is a dip in the share price. So for us, we will have to adopt a wait and watch approach if you are a longer term player. But if you are a short term player, then you can take the lower time frame charting and see as and when opportunities develop therein. But for medium term to long term, you will have to play it safe, allow it to correct it, and as and when the consolidation holds on the lower side, you can then take the fresh, fresh initiative and see if the risk reward ratio is favorable. You can go for a new trade, but at the current valuation, with it trading at the higher range, we will have to sit on the sidelines and allow this consolidation to run its course and give us a newer opportunity as and when there is further dip and it holds on the lower side. So from medium term to longer term perspective, things are now looking helpful for the buy trade, but we need to wait at least for a week or two till we have the correction and consolidation afterwards. And if you are a shorter time frame trader, then if we see it holding these consolidation lows in next deep, then even in coming sessions we can go for a trade if it holds successfully closer to these immediate swing lows of around $38. So these are the assessment looking at its current fundamental as well as technical state, and the things are looking promising for the long traders, for the investors as well. The only thing is timing and getting the risk reward ratio right so as to make sure that even in the eventuality of we being wrong, we shouldn't be losing too much money. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I would be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous day ahead, a profitable day ahead. See you next time around with a equally interesting stock pick. See you tomorrow.